Hi guys, this is CA Balakrishna. In this video, we will be discussing RTP of May 2022. Okay, relating to paper 4, corporate and economic laws. First of all, starting with the MCQs. First of all, we will complete the MCQs. After that, we will be going into descriptive questions. First MCQ. Basically, he has given the case study relating to the MCQs, the case scenario MCQs, but we can answer these MCQs even without reading the case scenario as well. So we will be directly answering the case, the MCQs. First MCQ. It is evident from the case scenario that Lakshmi Nidhi Limited, okay, a Nidhi company, started its business with a paid up share capital of 95 lakhs, keeping in view the minimum paid up share capital with which a Nidhi can be started. How much is the excess paid up share capital Lakshmi Nidhi Limited had when it started its operations with effect from 20th August 2015. Basically, there is a Nidhi company. This Nidhi company has started its business with a paid up share capital of 95 lakh, but the minimum paid up share capital required for starting the Nidhi is 5 lakh only. Thereby, the excess paid up capital with which it has started its business is 90 lakh. Therefore, answer would be 90 lakh. Where you can find the 90 lakh? It can be found in C, option C. Okay, option C is the correct answer. Next, for the financial year 21-22, Lakshmi Nidhi Limited declared a dividend of 1 per share. Okay, 1 rupee per share has been declared as a dividend. What is the maximum amount of dividend it is permitted to declare without seeking approval of jurisdictional regional director? Choose the correct option from the options given below. If you see, the maximum dividend that the Nidhi can give without seeking the approval is 25%. Now, if you see, the face value of the shares of this Lakshmi Nidhi Limited was 10 rupees. 25% of this 10 rupees would turn to be 2.5 rupee. That means maximum of 2.5 rupees per share can be given as a dividend without seeking any approval. Where you can find it, 2 and 50 pice per share without seeking approval. Option C would be correct answer. Next, the case scenario states that Lakshmi Nidhi Limited also provided locker facilities to its members. What is the maximum rental income that the company can generate from the locker facilities provided to its members? It is 20% for financial year. Here he given 10%. Yeah, 20% of its gross total income. Option B would be correct. Let us see other options as well. He has given 25%, 30%. Option B, maximum of 20% of its gross income can be income in the form of rental income from renting of the lockers for a Nidhi company. Okay. Next MCQ. By declaring dividend of 1 per share, Lakshmi Nidhi Limited is required to pay 9,50,000 as a dividend amount to its members. How much amount it is required to transfer to general reserve when it declares a dividend of 9,50,000? Okay, an amount equal to the dividend has to be transferred to general reserve. Thereby, since 9,50,000 is given as a dividend, the same 9,50,000, an amount equal to 9,50,000 should also be transferred to general reserve. Thereby, option B would be correct answer. Okay, Lakshmi Nidhi Limited is required to transfer minimum 9,50,000. That is 100% of 9,50,000, the amount of dividend declared. Okay, that was first case scenario. Next case scenario. The first case scenario is related to Nidhi Companies Limited, and the second case scenario will be limited to PPIRP. Okay, pre-packaged insolvency resolution process. Let us see. Which among the following is not eligibility criteria for applying for initiation of pre-packaged insolvency resolution by the corporate debtor. He is asking which is not the eligibility criteria. See, he is eligible to submit resolution plan under section 29A of IBC. If the corporate debtor is eligible to submit the resolution plan, then he is also eligible to initiate PPIRP against itself. Thereby it is not correct. Has not undergone, no, even this is also not correct, because he is asking which is not the eligibility criteria. If he has not undergone, then that would be eligible to initiate PPIRP. Thereby option B is also not correct. Next, has completed CIRP during 3 years preceding the initiation date. Option C would be correct answer. Okay, if the entity corporate debtor has completed CIRP during 3 preceding financial years, then it cannot initiate PPIRP against itself. Hope that is clear. Next, the PPIRP may be made in respect of corporate debtor who commits default subject to the condition that majority of directors of corporate debtor have made a declaration stating inter alia that the corporate debtor shall file an application for initiating pre-packaged insolvency resolution process within definite time period. What is the time period? It is 90 days. Okay, the directors has to give a declaration stating that within 90 days they will initiate PPIRP. Thereby option B, not exceeding 90 days. Next, an application for initiating PPIRP may be made in respect of corporate debtor who commits a default subject to the condition that members of corporate debtor have passed dash approving the filing of application for initiation of pre-packaged insolvency resolution process. Ordinary resolution? No. Simple resolution? No. Special resolution? Yes. They should pass special resolution in order to initiate PPIRP. Okay. General meeting special resolution. Next, the corporate debtor shall obtain an approval from its financial creditors not being its related party representing dash due to such creditors for the filing of application for initiation of prepackaged insolvency resolution process in such form as may be specified. It should obtain approval from 66% of financial creditors. See, not less than 66% in value of the financial debt. Option B would be correct. Next, the adjudicating authority shall within a period of how many days of receipt of the application for initiation of PPIRP by an order admit the application if it is complete or reject the application if it is incomplete. It is within 14 days. The adjudicating authority has to either accept or reject the application. Answer option B would be correct answer. Next, independent MCQs. We have completed 2 case scenarios. Next, A1 Software Limited is facing continuous losses and financial crunch for last 4 years or so. In order to save company from impending liquidation, it proposed a scheme of compromise to its creditors worth 1 crore 50 lakhs and accordingly filed the said scheme with the jurisdictional tribunal. Okay, minimum how many creditors in value must agree and conform to the scheme of compromise so that tribunal may dispense with calling of the meeting of creditors. If at least 90% of value of creditors agree, then tribunal can dispense off with the requirement of calling of meeting of creditors. Thereby, since here the value is 1 crore 50 lakhs, 90% of 1 crore 50 lakhs would be 1 crore 35 lakhs. Thereby, creditors who are owing at least 1 crore 35 lakh must agree for the scheme. In that case, the tribunal can dispense off with calling of the meeting. Okay, option A would be correct answer. Next, Shivdeep submitted his claim as operational creditor to the liquidator of Chiranjeevi Fruits Products Limited, which is under liquidation. After submission of his claim, Shivdeep is desirous of altering it. Out of the following four options, which one correctly indicates the time period within which he can alter his claim after its submission? It is within 14 days. Option C. Shivdeep can alter his claim within 14 days of submission to the liquidator. Okay. Next. Nandish, a resident Indian, remitted US $1 lakh on 7th June 2021 to his son Ishan, who is settled in California. Okay. First of all, 1 lakh. Next, USA. Since he urgently required funds on 9th July 2021, Nandish again remitted US $71,000. Okay. To meet expenses to be incurred in respect of his ailing wife, Madhavi, who had recently gone to USA to meet his son Ishan but had developed serious coronary disease. For specialized treatment of Madhavi at specialized hospital, a sum of again $79,000 was sent. Okay. Was remitted for second time on 30th July 2021 by Nandish. Within next 10 days, Madhavi recovered and was allowed to return to her son's place. Okay, son's residence from the hospital. Choose the correct option from those stated below as to when Nandish can send further foreign exchange to his son Ishan for purpose of purchasing a house without obtaining the prior approval of Reserve Bank of India. C. Under LRS scheme, you can send maximum of $2.5 lakh per financial year. Here he has sent 1,71,000 and $2,50,000. Okay. In the present financial year, the limit of $2.5 lakh has been completed. Thereby, he cannot send any extra amount without approval of the RBI. Thereby, he can send the extra amount only in the next financial year. Thereby, see, without obtaining approval of Reserve Bank of India, Nandish can send further foreign exchange to his son Ishan only in the month of April 22 or thereafter. Option A would be correct answer. Okay, only in the next financial year he can send the excess amount for purpose of constructing the house. Next. After 5 years of stay in USA, Mr. Umesh came to India at his paternal place in New Delhi on October 25th, 2019 for the purpose of conducting business with his two younger brothers, Rajesh and Somesh, and contributed a sum of 10 lakh as his capital. Simultaneously, Mr. Umesh also started a proprietary business of selling artistic brassware, jewelry, etc. procured directly from the manufacturers based at Moradabad within a period of 2 months after his arrival from USA. Mr. Umesh established a branch of his proprietary business at Minnesota, USA. You are required to choose the appropriate option with respect to residential status of Mr. Umesh and his branch for the financial year 2021 after considering the applicable provisions of Foreign Exchange Management Act 1999. If you see, for calculating residential status of 2020-21, we have to see his resident during preceding financial year. In preceding financial year, he arrived India on October 25th, 2019. That means his stay during preceding financial year is less than 182 days. But in the current financial year, he came to India for business purpose. As per ICI view, if he has come to India for business purpose and even though he stayed in India for less than 182 days during preceding financial year, he will be considered as a person resident in India only. Thereby, this person, Mr. Umesh, will be PRI and his branch which he is controlling from here, which he established in USA, will also be a person resident in India. Thereby, answer would be for financial 2021, Mr. Umesh and his branch established in Minnesota, US are both resident outside India. No, it is not correct. Person resident in India. Let us read it. For financial year 2021, Mr. Umesh is resident in India, but his branch established at no, both are resident. For financial year 2021, Mr. Umesh and his branch established at Minnesota, USA are both person resident in India. Okay, option C would be correct answer. Next, Akshara Builders and Developers Limited, a company listed on BSE, is contemplating upper revision in the rate of interest of its existing 12% bonds by 1% so as to make them 13%. Okay, it is contemplating to increase the rate of interest in its bonds, okay, with effect from August 14, 2021. The said proposal is to be laid before the board of directors at the meeting to be held on July 14th, 2021. Okay, in the board meeting that has to be conducted in July 14th, 2021, this matter is going to be discussed. Okay, the proposal related to increase in the rate of interest. From the following options, choose one which correctly indicates the latest date by which Akshara Builders and Developers Limited is required to intimate the BSC Limited about the board meeting where increase in rate of interest is being considered, keeping in view the regulation 29 of Securities Exchange Board of India Act. Okay, as per LODR regulations, the intimation of at least 11 days prior has to be given to the stock exchange prior to board meeting. Okay, here the board meeting is to be conducted on not August, here July 14th. 11 days prior to July 14th means by at least July 3rd. Let us see July 3rd whether it is present in the options. July 1st, no. July 3rd, yeah. Option B would be correct answer. Next, July 5th, July 7th, both are wrong. Option D would be correct answer. Next, Mr. X receives an antique statue from his best friend. Okay, best friend is not a relative. Hope that is clear. Who resides abroad as a gift on his 50th birthday worth 70,000. State the nature of gift given to Mr. X in the light of FCRA. Okay, if you receive gift up to 1 lakh from the relative, then that would not be treated as FCRA, but it is received not from relative, it is received from best friend. Thereby the answer is it is a foreign contribution. Here it says it is not. Okay, it is a foreign contribution being made by other than his relative. Option B would be correct answer. Next, descriptive questions. Vibhuti Mechanics Limited, having registered office at Rajendra Place, New Delhi, was incorporated on 17th February 2016 with 5 directors who are responsible for managing the affairs of the company. Harshit, one of the directors, looks after the marketing function, but his understanding with the other 4 directors is dwindling day by day. Other 4 directors, that is Nipun, Lakshita, Shreyas and Vidur, are also suspecting that Harshit is involved in some illegal activities which may cause a huge loss to the company in future. Now they are contemplating removal of Harshit from the office of directorship before the expiry of his term. Analyze the following statements with reasons quoting relevant provisions of the Companies Act 2013. Okay, they want to remove one of the director. What are the questions he is asking? Let us see. First one, Keeping in view his illegal activities, Nipun, Lakshita, Shreyas and Vidur can remove Harshit by passing board resolution. No. The board of director can be removed only by general meeting ordinary resolution. That too it requires a special notice. Thereby board of directors cannot remove the director. Okay, it requires general meeting ordinary resolution by shareholders. Okay. Next, Harshit can be removed only by passing special resolution. No, just general meeting ordinary resolution is sufficient. Special resolution is not required. Next, Nipun wants to appoint Dishant, an employee of the company, but is very close to him as director in place of Harshit after his removal. Okay. Nipun wants to appoint Dishant after removing the existing director. Okay, first of all, by passing general meeting ordinary resolution, the existing director can be removed, and after that, in this vacation of the office of director created, a new director can be appointed at such same meeting, provided a special notice is also received from the shareholders for appointing the new director. Okay. Now, this Nipun has to take care that the shareholders give a special notice for appointing Dishant at the general meeting at which the earlier director was removed. By following such procedure, Nipun can appoint Dishant. Hope that is clear. Next, Mr. Vasumadan Lal, one of the directors of Florence Shares Private Limited, was found to be guilty of contravention under SEBI Act 1992 under section 27 and was imposed a penalty of 70 lakhs wide order of SEBI. Okay, under SEBI some 70 lakhs penalty was imposed, dated 14th April 2021. SEBI issued notice to Mr. Vasumadan for paying the penalty amount, but he refrained from doing so, and unfortunately he passed away on 25th May 2021 without paying the penalty amount. Okay, SEBI has imposed a penalty of 70 lakh on which date? In some April, and on May this person has passed away. Okay, let's see still what happened. His estate worth 60 lakhs was inherited by his son Raj Gopal Lal, which included a property worth 25 lakh which was mortgaged by him for taking a bank loan. Recovery proceedings under section 28A were initiated against Mr. Raj Gopal by the recovery officer for recovering penalty amount payable by Mr. Vasumadan. In this context of aforesaid situation, please answer the following questions. What are the questions in the above context? Let us see. Whether it is valid to initiate recovery proceedings against Mr. Raj Gopal. See, Raj Gopal is legal heir of Mr. Vasumadan. Since Vasumadan has passed away, all the proceedings against Vasumadan regarding penalty that has been levied before he passed away can be recovered from his legal heir Mr. Raj Gopal, thereby initiating of proceedings for recovery of penalty against Raj Gopal is valid. Okay, next, what shall be the liability of Mr. Raj Gopal in such recovery proceedings? Okay, in such recovery proceedings, Raj Gopal will be liable only to the extent of amount that has been received by him as an inheritance from his respective Vasumadan. Okay, as inheritance, how much estate he received? He received 60 lakhs. Of this 60 lakhs, some 25 lakh, okay, property worth 25 lakh was mortgaged regarding a bank loan, thereby 25 lakh would be reduced, and the balance remaining would be some 35 lakh. Okay, thereby the liability of Mr. Raj Gopal would be to the extent of 35 lakhs. Hope that is clear. Next, See, I'm just explaining the concept. I'm not going to read the answers. You can go through the answers. I'm just explaining you the concept here. Next, if at all it is necessary, I'll go through the answer in case if it is required. Okay. Next, Mr. Tushar Maheshwari submitted his candidature for being a resolution applicant of Walt Chambers Limited in pursuant to a invitation made for the names of prospective resolution applicants under section 25 subsection 2 clause H of the Insolvency and Bankruptcy Code 2016 by Mr. Manish Dave, the resolution professional. Okay, Mr. Tushar has made application for acting as resolution applicant. Okay, regarding the insolvency proceedings of Walt Chambers, we'll see next what happened. Mr. Tushar is a spouse of sister of Mr. Amit Dharia. Okay, this Mr. Tushar who made application for being acting as resolution applicant is actually spouse of sister of Mr. Amit Dharia, who is going to be involved in the management of Walt Chambers Limited as a director at the time of implementation of the resolution plan. That means Mr. Tushar has become connected person. Okay, as per the definition of connected person, he has become connected person. Don't worry, I will read the answer relating to this as well, so that you will be getting a clarity regarding this. And Mr. Tushar, being a person resident in India, was convicted under the provisions of Foreign Exchange Management Act 1999 for an act specified under the 12th schedule of IBC 2016 with imprisonment for 2.5 years. See, if a person has been convicted of offense for a period and imprisoned for a period exceeding 2 years, then he is not eligible to act as resolution applicant. Okay, that is primary analysis. But there is an exception available to such a rule. We'll see that. And only 1 year and 3 months has expired from the date of his release of imprisonment for not paying penalty arose due to bringing into India from USA during his temporary visit 2 crore worth Indian currency notes. Okay, this is the offense that has been committed under FEMA. In the light of given facts, examine whether Mr. Tushar is eligible to be resolution applicant. Basically, if a person has been convicted of offense that has been specified under 12th schedule and imprisoned for a period more than 2 years, then he will not be eligible to act as resolution applicant. But such provision is not applicable for a connected person. Here in this case, Mr. Tushar is a connected person. Thereby, this provision of ineligibility will not applicable to him. Thereby, he can act as resolution applicant. Okay, once we'll read the answer relating to this, how he presented it. Eighteenth question. Yeah. See. As per clause D of section 29A of Insolvency Bankruptcy Code 2016, a person shall not be eligible to submit a resolution plan. That means he is not eligible to act as a resolution applicant if such person or any other person acting jointly or in consent with such other person has been convicted for an offense punishable with imprisonment for 2 years or more under FEMA Act specified under 12th schedule. Okay, but however, this clause is not applicable to a person who is connected person referred to in clause 3 explanation 1. Now, who is a connected person? Connected person means any person who is the promoter or in management or control of resolution applicant. Okay, any person who shall be promoter or in management or control of business of corporate debtor during the implementation of resolution plan. Okay, the holding company, subsidiary company, associate company or related party of the person referred to in clause 1 and clause 3. Here our Mr. Tushar will be covered under clause 3. Okay, thereby since he is a connected person, this provision will be not applicable to him and he can act as resolution applicant. Hope that is clear. Next, question number 19. Yeah. Blue Star Incorporation is a company incorporated in USA. Okay. 4 years back it has been incorporated and has no established place of business in India. The company has entered into following contracts. What are the contracts? These are the years. Okay, there are 4 preceding financial years in which the contracts are entered, and these are the contracts which are entered in ordinary course of business. Okay, in the first year it entered 4, it entered 6, it entered 5, it entered 3. Okay, these are the contracts in ordinary course, and these are the material contracts. Okay, apart from above, one contract has been entered into with its manager. The company intended to offer its securities in India. Okay, the company intends to offer securities in India. For that purpose, the secretary of company, Mr. Berry Christian, prepared the prospectus along with annexing the required documents and got it registered. Expert's consent was issued in separate statement, the reference of which was given in the prospectus. Okay, we have discussed in a chapter relating to this foreign companies that if any company wants to issue securities in India, then it has to first of all issue a prospectus, and also expert consent should also be taken for it. Now, few application forms for securities of Blue Star Incorporation were issued to prospective investors without the prospectus. You cannot issue the application forms without the prospectus. If you are giving application forms, then along with the application form you should also issue prospectus. But here he issued to the prospective investors application forms without the prospectus, out of which one such form was issued in connection with bona fide invitation to person to enter into underwriting agreement. Okay, in relation to underwriting agreement you can issue applications without prospectus, but for common other investors who are not entering into underwriting agreement, for all those investors you must issue the application forms only along with the prospectus. Now, with respect to the securities of Blue Star Incorporation, in the context of aforesaid case, please answer the following questions. What are the questions? Whether the expert's statement can be considered to be included in the prospectus. First of all, if you are issuing a prospectus, then the expert's consent must be present in it. But here, see, expert consent was issued in separate statement, the reference of which was given in the prospectus. Since the reference of the expert consent was given in the prospectus, it will be deemed that the expert's consent is contained in the prospectus. Okay, thereby it will be deemed that expert consent is contained. Okay, what copy of contracts would have been annexed with the prospectus by Mr. Berry? Okay, along with the prospectus there are some type of contracts to be annexed to the prospectus. What are they? First one, if you have entered into any contract with the manager or managing director, then you should annex the contract of employment with them. Here one contract has been entered with manager, thereby this contract has to be annexed to the prospectus. Okay, next, and also all the material contracts that you have entered during preceding 2 financial years should also be annexed. Here if you see preceding 2 financial years, these are the preceding 2 financial years. In the two preceding financial years, material contracts entered were 7, Thereby 1 plus 7, totally these 8 contracts must be annexed to the prospectus that the company is going to issue. Okay, here the answer would be 8 contracts. Next, whether it is valid on part of Blue Star Incorporation for issuing few application forms without prospectus. No, it is not valid. Application forms must be issued only along with the prospectus, but there is exception. Okay, while issuing application forms for underwriters, you can issue without issuing the prospectus. Okay, thereby apart from the underwriters, for all remaining few investors, the company has issued the application forms without issuing the prospectus, which is not valid. Okay, but in respect of underwriters, it is valid. Hope that is clear. Next, Saksharta Foundation, a trustee, is running a renowned private school named MK Trivam, engaged in the activities of providing education from primary to higher secondary. Okay, for the financial year March 2020, it received interest of 35 lakhs in its foreign contribution regulation account, from which it withdrew 5 lakhs for conducting an open workshop with participation of schools at national level for development of children and the teachers in school in tune with the today's education system. The income earned through such workshop is 12 lakh. Okay, recently the school collected its annual fee from the students totaling 5 crore, which included fee from foreign students amounting to 40 lakhs. Okay, for the training program to be held, Saksharta Foundation received sponsorship money of 10 lakhs from Crimmers Private Limited, in which 60% of the shares are held by Housder Incorporation, a USA company, within the limits specified under FEMA. Okay, this has to be observed. Within the limits specified under FEMA. This is 60% investment is within the limits specified under FEMA. Okay. Such money was deposited by it in FCRA account. Okay. Now, this is the scenario. In the context of aforesaid scenario, answer the following questions. What are the questions? First question, whether the amount received from Crimmers Private Limited was to be deposited in foreign contribution regulation account by Saksharta Foundation. Here you have seen that this Saksharta Foundation has received some amount from Crimmers Private Limited. Now, in this Crimmers Private Limited, 60% of shares are held by Housder Incorporation. Now, for a contribution to be known as a foreign contribution, it must be received from foreign source. Okay, it must be received from foreign source. Now, to be known as foreign source, if a foreign company is holding more than 50% equity shares in Indian company, then such Indian company will be treated as foreign source. Okay, if you see here, in Crimmers Private Limited, 60% of shares are held by foreign company, thereby it should be treated as foreign source. But there is an exception. See, if the foreign company is holding equity shares in Indian company more than 50%, but allowed as per FEMA. Okay, such holding of more than 50% is as per FEMA only. Okay, such holding of more than 50% is allowed under FEMA. In that case, such company will not be treated as foreign source. If you see, the Housder Incorporation is holding 60% shares in Crimmers Private Limited, which is within the limits specified under FEMA. Since it is within the limits specified under FEMA, it will not be treated as a foreign source, and the amount received from crimmers will not be a foreign contribution, and foreign contribution cannot be deposited in a foreign contribution account. Thereby, depositing the amount in FCRA account by Sakshartha Foundation is not valid. Hope this is clear. Next, identify in the given case the foreign contributions received by the Sakshartha Foundation. Okay, what are the foreign contributions that the Sakshartha Foundation received? First of all, if you see, it has earned income interest of 35 lakh from foreign contribution account. Okay, we have discussed that interest earned on foreign contribution is also deemed to be a foreign contribution. Thereby, this 35 lakh is a foreign contribution. Okay, and also it has earned 12 lakh rupees through workshop, and the investment for this workshop of 5 lakh was made from this 35 lakh. That means the 5 lakh of foreign contribution is used for generating 12 lakh. Thereby, this 12 lakh will also be a foreign contribution. Thereby, total foreign contribution that it has earned is 47 lakh. Hope this is clear. And this amount of 40 lakh which is received in the form of fees from students cannot be considered as a foreign contribution. That was question number 20, which is quite important. You can star mark it. Next, Mr. Joshi was in possession of some cash, okay, obtained from the offense of money laundering. He bought a property with that money and transferred such a property to Mr. Keyur Pandya. Registration of the said property in the name of Mr. Keyur Pandya was pending, and the adjudication authority under the Prevention of Money Laundering Act 2002, after issuing a show cause notice to Mr. Joshi and considering his reply, passed an order for provisional attachment of the said property. Okay, after the property was sold to Mr. Keyur, it was found that the property was money laundering, involved in money laundering, and the respective adjudicating authority has ordered the provisional attachment against the property. Now, during the trial of the said case by special court, Mr. Keyur came to know of such attachment of the property. Okay, this person who bought the property in good faith, okay, from Joshi, came to know that the property is provisionally attached. When he came to know? He came to know during a trial that has been conducted by the special court. Okay, he came to know that such attachment of property bought by him from Mr. Joshi, and he made immediately claim for such property with the special court. In his claim, he mentioned that he was not aware that the property which he bought was proceeds of crime as per the provisions of this Prevention of Money Laundering Act 2002, and he was totally unrelated to Mr. Joshi and had bought the said property at fair market value by making payment through account pay checks. Further, he mentioned in his claim that due to such provisional attachment of the property, he has suffered a business loss of 5 lakh. By this, you can observe that Mr. Keyur has purchased the property in good faith. Since he purchased the property in good faith, special court will hand over the property to him. Now see, whether the special court can consider the claim of Mr. Keyur and direct for restoration of property to him. Yes, it can consider, since he purchased in the good faith. Okay, next, whether Mr. Keyur could have made such claim at an earlier stage of proceedings. See, this Mr. Keyur has made the claim during trial conducted by special court, but before the trial conducted by special court, adjudicating authority passed order of this provisional attachment. Okay, at that time only the Keyur could have made application to adjudicating authority regarding his claim. Okay, even at this stage also he could have made the claim, but he made the claim during this stage, which is also valid only, but he was also having an option to make the claim during the stage where adjudicating authority was passing a provisional attachment order. Okay, that has to be mentioned by you. Next, what is the option available with Mr. Keyur if special court rejects the claim? If the special court rejects the claim, the only option available is to file appeal with appellate authority. Okay, with appellate tribunal. That is the option available. Okay. Next question. A dispute has been aroused between the management of Paras Furnishing Limited and its laborers. Okay. The dispute was to provide the basic facilities at workplace, air conditioning environment and hours of work. The management of the company sent an invitation to the leader of the labor union to conciliate on the issues arised by the laborers. The union leader accepted the invitation of conciliation. Now regarding this, what are the questions? Examine the given situation and answer the following. First question. When the conciliation proceeding shall be said to be commenced in the given case? Okay, in the given case, the conciliation proceedings will be commenced from the date on which the leader of the union has accepted the invitation. Okay, this would be date of commencement of conciliation proceedings. Next, how the settlement agreement will be arrived by the conciliators? Okay, they will be mutually discuss among themselves and they'll arrive at a settlement. After that, they'll make an agreement, okay, regarding the solution, and the agreement will be enforceable as a decree of court. Okay, decree of court. This is the procedure. Hope this is clear. Next, question number 23. Shine Jewelers Limited is engaged in the business of making and selling of gold ornaments. Recently, the government of India has made it compulsory for jewelers to put hallmarking on all the gold ornaments. However, the company is playing foul and not marking or wrong marking of hallmarking on the gold jewelry. The central government filed an application to the tribunal stating therein that the affairs of the company are being conducted in a manner prejudicial to the public interest. Okay, under section 241, the central government can make application to the tribunal against the company if it is against the public interest. Now, the tribunal summoned the company, but the company didn't appear. One more chance was given to the company to appear, but the company remained absent. The tribunal passed an order dated 30th June 2021, which provides the regulation of conduct of affairs of the company in future. Based on the captioned facts, answer the following question. What are the questions? Under what circumstances the central government can file application before the tribunal? Okay, in case the company is acting against public interest, then the central government can file application under section 241. Okay, fine. Next, what are the powers of tribunal after filing of application by the central government under section 241? The powers of tribunal are as specified under section 242. Okay, there are some list of powers that the tribunal is having under section 242. You have to mention them. After the order of tribunal, what shall the company do? Okay, what order the tribunal passed? It has passed order of regulation of conduct of affairs of the company in future. That means it has asked the company to comply with the respective regulations. Okay, to follow the regulations of hallmarking. Thereby, after this tribunal has passed the order, the company must follow the rules relating to hallmarking. Next, question number 24. Rudraksh Ayurveda Limited. See, this is a very big question. You have to concentrate while I am reading, otherwise you will miss it. See, I am starting again. Rudraksha Ayurveda Limited is engaged in the business of producing and selling of Ayurvedic medicines. Its purchases department is headed by Jagriti. Jagriti is the head of purchase department. The purchase department of the company is responsible for purchasing various ingredients which are used for manufacturing of Ayurvedic medicines. Some of the ingredients like Swarna Bhashma, Rajat Bhashma involves heavy costs. Okay, these two are the raw materials which will be purchased by purchasing department, and they are very costly. Jagriti was a dedicated purchasing power of ingredients up to 1 lakh rupees individually for one lot and 10 lakh rupees to the committee. Okay. The committee consists of head of purchase department, head of marketing department, head of finance and accounts department, and managing director. Okay. Suppliers of Swarna Bhashma and Rajat Bhashma raised their invoices, and the amount due from the company was somewhere between 18 lakhs to 20 lakhs. Jagriti always negotiates with the suppliers to inflate the price by 10% of the actual price and pass on the 10% as a commission to Jagriti. This practice was being in vogue since Jagriti was promoted to the head of purchase department, that is from January 2019. The bills of suppliers were sent to the finance and accounts department only after recommendation for payment by Jagriti. Jagriti takes the commission of 10% upfront before recommending the invoices for payment. Okay, here Jagriti is involved in some fraud in the company. Now, the management of the company was having some doubt on the integrity of Jagriti, so it entrusted the forensic audit since January 2019 to till date of invoices recommended by her. Okay, they have ordered for a forensic audit to be conducted. The forensic auditor carried out a detailed investigation market price prevailing of Swarna Bhashma and Rajat Bhashma on different times. The auditor also sent a bogus supplier to Jagriti for supply of Swarna Bhashma and Rajat Bhashma. The bogus supplier was also told the same commission sharing story. The forensic auditor submitted the report to the managing director and narrated that by inflating the invoices by 10%, the company since January 2019 has incurred a loss of 25 lakh rupees. This is the amount involved in the fraud. Okay. The turnover of the company for the year ended 31st March 2021 was 50 crore rupees. Okay, by this you can understand that the question is going to be related to fraud, that is section number 447. Now, what he is asking, based on the captioned facts, answer the following questions. What punishment for fraud has been provided in Companies Act 2013? You have to write down section number 447 relating to fraud. What this section says, if the amount involved in the fraud is more than 10 lakh or 1% of the turnover, whichever is lower, in that case punishment: imprisonment not less than 6 months, which may extend to 10 years, fine not less than amount involved in fraud and extend to 3 times the fraud. Okay, if at all public interest is involved, then imprisonment of minimum 3 years. And in case amount involved in fraud is less than 10 lakh or 1% of the turnover, whichever is lower, then the imprisonment is term which may extend to 5 years, fine which may extend to 50 lakh, or both. This is the provision relating to fraud. Okay. This has to be mentioned by you. Now he's asking what is the punishment for the fraud in the present case. If you see in the present case, amount of fraud is 25 lakh. That means, and 1% of turnover, that is 1% of 50 crore turns to be 50 lakh. 50 lakh or 10 lakh, whichever is lower, 10 lakh is lower. Now the amount involved in fraud 25 lakh is more than 10 lakh, thereby this punishment will be applicable. Okay, it will be covered in this category. Now imprisonment, the punishment is imprisonment not less than 6 months, which may extend to 10 years, and fine not less than amount involved in the fraud, that is amount involved fraud is 25 lakh or extend to 3 times the fraud, that is 3 times of amount involved in fraud is 75 lakh. This would be the punishment. That would be the answer to first question. Next, what would have been your answer if the amount involved in fraud done by Jagriti is 9 lakh only? If the amount involved is 9 lakh, it is less than 10 lakh, thereby it will be covered under the second category. The punishment would be imprisonment for a term which may extend to 5 years, or fine which may extend to 50 lakh, or both. That would be the punishment. Okay, that is the answer to second question. The final question, if the fraud in the question would have been of public interest, what would be the term of imprisonment? Then the term of imprisonment would be minimum 3 years. If public interest is involved, imprisonment of minimum 3 years. Okay, this is the question relating to fraud, section number 447. Next question, last and final question. Clause 36 of Articles of Association of Swasth Medical Pharmacy Limited SMPL states the dates on which board meetings shall be held every year, and therefore if board meetings are held as scheduled, there is no need to send notice of such meeting to every director. The notice of meeting shall be sent to every director only if particular board meeting is held on a date which is otherwise than that mentioned in the clause 36. Raghav, one of the director of the company, feels that it is mandatory to send notice of every board meeting to all the directors, otherwise it shall be violative of relevant provisions of Companies Act 2013. Yes, as per section number 174, notice of board meeting must be sent for all the board meetings. Okay, even though the date of the board meeting is prescribed in the Articles of Association and the company is conducting the board meeting as scheduled in the Articles of Association, even for such types of board meetings also the notice of board meeting must be sent. Okay, sending a notice of board meeting is mandatory. Hope that is clear. Now analyze the contention of Raghava. Yes, the contention of Raghava is correct. By this we have completed discussion of RTP May 2022.